We have Kaustubh Belapurkar, the Director for Fund Research with Morningstar Investment Advisers India. Kaustubh, thanks so much for joining us today on ET Now. So like I was mentioning, the change that has been brought about up until now, the rule was that look, you have to put 65% of your fund in equities. Now the rule is you put 75%, but that 75% has to be equally divvied up. So it'll be 25 in large cap, 25 in mid cap, 25 in small cap. So true to its name, it'll be a multi-cap fund. So let's start off by understanding first what would it mean for a multi-cap fund now for the unit holders of the multi-cap fund.
Hi Mubina, and thanks for having me on. So if you see what SEBI's tried to do, obviously we had the categorization that they launched in 2017 and defined this whole set of categories with mandates that they can run. Now multi-cap obviously was run with the 65% equity mandate, but was left open in terms of large, mid, and small, depending on the manager's discretion. Clearly, as you spoke about it, what SEBI has now done is set 25% each in each of these categories needs to be held by the manager. If you look at the broader category of multi-cap funds, right? A lot of them do hold a significant amount of large cap, and for various reasons, these are a lot of vintage funds that have been running sort of large cap bias portfolios for a fairly long period of time with a large set of diverse investors in them. And that's where, in terms of their comfort of running an investment style or strategy was biased towards the large cap side of things. And you have a variety of sort of funds and fund managers there. But broadly, you would see the universe, there would be a large number of managers who would have a large cap bias anywhere northwards of 65% in large caps, and they've traditionally done that for many, many years now. There is a smaller subset that has been managing it with a 60% large cap and the rest in mid and small, but I think the majority resides in the first category. Now, going ahead, with what SEBI's defined, funds obviously, they're in consultation with the regulator, but basically what the way we see things are, there are two approaches, and SEBI's also come out of the clarification late last night in terms of what they meant and what are the options for AMCs. But if you just kind of broadly outline what can happen, one is obviously that the manager wants to kind of maintain the strategy that he's been running for a while. Then the option really for them is to exit the multi-cap strategy, and they would either move the fund into a category which is closest aligned to how they've been managing the strategy in the past. But remember that SEBI also has a guideline that for most categories you're allowed only one fund per category. So if they already have a fund in that category which they think is the best fit, then they would eventually need to merge the two strategies into one single fund as per SEBI's guidelines. The other option obviously is for them is to actually go and meet the guidelines as per SEBI's put down, which is 25, 25, 25 in large, mid, and small. So that's a decision I think obviously managers are right now in consultation with the various stakeholders, considering what their investment mandate has been in the past and what is probably in the best interest of investors is what they're going to kind of try to get at, which is the best possible solution in the change in the amendment of the guidelines and the regulation.
Okay, so I guess you'll also have to watch out for what exactly your mutual fund house as well communicates as to what they are doing. Each mutual fund house may have a different strategy. Some may of course stick to the name and ensure adherence to the SEBI rule. They may have to rejig the constituents of the portfolio, which means they'll have to buy more mid and small cap stocks in the portfolio to adhere to the rule. And the others, like Kaustubh mentioned, may either change the labeling. If they already have a fund under that label, then they will probably merge it with that label. That could be some of the possibilities. So for let's say for individuals who are going to see their multi-cap funds, Kaustubh, adhere to the SEBI norms, which means they'll have to buy more small caps into the fund, they'll have to buy more mid caps into the fund, and perhaps sell off some of the large cap stocks, because like you mentioned, a majority of the multi-cap funds do have 60 or 65% upwards in large caps. So do you think there could be some fluctuation in returns from the multi-cap fund that these unit holders can expect in the course of the next 4-5 months until Jan 2021, which is when SEBI has said that these funds have to adhere to these rules?
Sure. So I think Mubina, the most important thing to understand is that and the most important thing that when we speak to the fund managers is try to do as little disruption as possible in terms of the investor experience of, kind of maintaining a status quo on the strategy. So like I said, I probably expect a lot of them to reevaluate which category that fund would fall into. But, if there are strategies that will potentially say, okay, look, I want to get into this category of, stay in the category of multi-cap with a, 25 minimum in each of these. I think from an investor's perspective, there are two things to, understand and acknowledge. One is that this fund, you have to kind of evaluate, is that continuing, is it useful to be a part of your portfolio or not, given the new mandate under which it will apply? Because, if you've traditionally invested in a fund that has maybe a 70-30 or a 80-20 large cap sort of holding, and depending on your risk return objectives, and you need to understand that the fund is not the portfolio itself, but is a part of the portfolio. So you need to look at it holistically in terms of what is the overall allocation of your portfolio amongst the other funds that you hold. So I think these are things that investors will need to keep in mind. But obviously, the bottom line is that if a fund that's been traditionally managed with a large cap bias does move 50% into small and mid caps, the risk profile of that fund does change. But like I said, you need to look at the intermingling of that fund in your portfolio rather than just the fund as a standalone, and then take a holistic call. That said, I think, obviously the asset managers are in consultation with the regulator, and they will figure out the best course of action, which they believe is in the right interest of their set of investors. So, I would just wait for this space before really jumping to a conclusion. And that's the advice that I would give to investors, that do not take a hasty call. Do not try to think that, if the fund's going to get into small and mid caps, potentially smaller and mid caps can run up. I wouldn't really get into that. Stick to basics, stick to asset allocation. Wait for your asset manager to communicate in terms of the guidelines what they plan to do with the strategy. Do they stay put in multi-cap and rejig the portfolio, or do they sort of reallocate it to another category or merge? And then take a call on the parameters that I just mentioned. Obviously, you will get a load-free period of for 30 days. But also the other important thing that I would guide investors to keep in mind is the taxation impact, which can potentially come about because if there could be a short-term or a long-term capital gains depending on when you bought the fund. So I think that's another element that investors should keep in mind before making that final decision.
I think you literally read my mind over there, Kaustubh, because that was going to be my next question. That if let's say an individual is not really comfortable with this rejig that SEBI has brought about for multi-cap funds, it may be easier said than done. That okay, if you don't like it, redeem it. But then you have the taxation element as well that one must consider, which many a times we forget, because remember now even long term there's the long-term capital gains tax as well that one must bring into consideration. So look at your overall asset allocation and then accordingly make a decision. But more importantly, before that, wait for any communication from your asset management company, or simply put, your mutual fund house. See what they are telling you. Are they going to stick to the investment strategy, or if not, or are they going to really adhere to the SEBI norm and say that, look, we want it to be true to the name, and it does, right? It's a multi-cap fund, so they will be buying 25% of each and every category. In that case, then you must look at your portfolio holistically and see that how is it really working out for my portfolio. Kaustubh, would you agree that up until now, or actually if you could just talk to us, that up until now, what would you say is the riskometer or the risk factor of the multi-cap fund, and post Jan 2021, or let's say any new NFO in the multi-cap fund category does is launched, do you think the risk appetite of the risk factor will change dramatically, and where would you closely most associate it to? Because we usually say, look, ETFs are one of your most stable ones with the least amount of volatility, then come large cap funds, and then mid caps and small cap funds last. Where does this put multi-cap funds in terms of the risk they carry for an individual?
So I think that's a great question, Mabina, and I think it's very important to understand this. One is, like I said, it has to be a portfolio context. But if I just look at it on a fund level basis, clearly, as a multi-cap fund under the new regime, what's been proposed, you will be holding at least 50% in, so 25 in mid and 25 in small cap. And obviously, managers would tend to keep a little bit of margin, given that, every 6 months, the list of stocks can be changed. So the point that I'm making is that compared to what we've seen with a large majority of the multi-cap funds, they've been run with a large cap bias. Obviously, the risk or the volatility or the expected vols from these funds will increase because you will probably see, in the short term, greater drawdowns when there's a bear market, as we've seen the way small and mid caps can react. So I think that's important to keep in mind. What that means is that investors should be ready for slightly longer term horizons in terms of investment horizons, and also be ready for interim drawdowns, which could be larger than what they've seen in the erstwhile multi-cap avatar of that particular fund, if it chooses to remain in the in the multi-cap form. So I think these are things that investors need to keep in mind. But obviously, I mean, if I just kind of put in a pecking order, purely on an intuitive basis, it will probably fall more volatile than large and mid caps, but less volatile than say a mid or a small cap, just given by the way that the max holding of the 50% in large cap that can potentially be held by these fund managers.
Okay. All right. Well, there you have it. So, this question, in fact, and this answer that Kaustubh's given is extremely important for every individual, because everybody has a different assessment of, how much risk that they can take on in their portfolio. You usually notice that people who are a bit younger, who are just starting off, they would perhaps have maybe a few more small or mid-cap funds, or in general more equity exposure, if you have to put it that way. Whereas as you sort of advance and go closer to achieving your financial goal, whatever that may be, let's say it's retirement. As you come closer to retirement, you want something that does not have as much of volatility. It's relatively a little more stable. But mind you, equities, of course, as an asset class, does tend to have a bit of a higher, risk component. But yeah, within that bracket as well, you have all of these categories. And now maybe a little bit more of that volatility factor may be added on to multi-cap funds, especially as mutual fund houses now will have to purchase more mid-cap and small cap funds. So, Kaustubh, for whom now does the multi-cap fund essentially become suitable? It is, of course, still largely an equity mutual fund, obviously, since 75% has to go into equities at least. So, which sort of investor, in which age group, depending on what their time horizon is, would you recommend a multi-cap fund become suitable for?
I would think of it like, again, I talked about the portfolio approach. I think that's most important because the multi-cap fund cannot be portfolio. It cannot be like, say, for instance, the single holding in your portfolio very clearly, because it's not like a one-size-fits-all that, every investor would come with a 25-25 or a 50-25-25, there's 15 large cap sort of allocation. It can be a part of your portfolio as long as you want to have, I would say, reasonable exposure to small and mid caps. Again, like I said, a part of your portfolio, maybe you could buy pure large cap or pure mid caps and small caps and do the same thing. And that's what a lot of investors in the erstwhile multi-cap category looked at it as, as a large cap plus sort of thing that, it gets a reasonably sizable large cap exposure with a little bit of sort of mid cap flavor. One notch below large caps, but obviously now, like we said, the risk profile of that has changed. So I would say that you would look to get investors with some sort of, a longish time horizon. And I say longish should be, to my mind, at least 6 to 7 years, nothing less than that. Because equities, we don't typically recommend anything less than 5 years to start with. And obviously, depending, and there's no like a ironclad definition of which age category this is necessarily suitable for. Even a 50-year-old gentleman, 50-year-old investor can have it. It's all dependent on where you think does that fit into your overall risk, profile bucket, and more importantly, investing time horizon. Because if you have an investing time horizon of just 3 to 5 years, then clearly this is not something you would recommend an investor to get into from his portfolio perspective.
Okay, Kaustubh Belapurkar, thank you so much for joining us then today on The Money Show and, sort of helping us understand that, from the mutual fund industry perspective, what exactly does this mean? What should unit holders as well brace themselves for? Many thanks once again and appreciate you giving us your time today on ET Now.
My pleasure.